What's going on, traders, and welcome to my stream. In this video, we're going to talk about one of my favorite patterns to long. This is the first Green Day bounce. This is one of my favorite patterns that we're going to discuss into detail of how to pretty much go long these movers. Because last week we had a very crazy week, and a lot of these stocks went up exponentially, like from 5 to like 35, and another stock went from like 5 to 25, and there's another stock that went from like, I don't know, $3 to $10. So all these movers finally had their first Green Day bounce, and this is one of my favorite patterns that I did end up making today, around 2,500 bucks, and I'm gonna go discuss all this after this video, my thought process, how to trade these things, and what to look for. Like each day, I scan the top 15% tickers of the market, and then I pretty much, look for how to trade them. So this is gonna give you an idea of how I thought about the first Green Day bounce, because we had three back to back from Friday and two Mondays. So it's gonna be a fun live stream to talk about, but after this video. All right. So first off, we're gonna discuss like what is a first Green Day bounce to get you to understand the process over here. So basically, we have a stock. Let's do a couple examples. Let's take PRFX. So PRFX went from let's call it. Let's see if we can get this. So it went up a stock up to a high of, I don't know, whatever A is, and then we came back down. Red candle, red candle, red candle, red candle, and then red candle, and then finally we have a green candle. These are dailies. So finally we have a green candle right about there, and then we break this yesterday's high there of around, I don't know, whatever this number is. So so a good example would be PRFX, and we're gonna discuss my thought process. So it breaks this high over here, and then we spike. We have this potential profit over here of whatever this is. That is kind of like the ins and out. And we're gonna look at a chart, like what is a first Green Day bounce. This is like, a number, say $3 to, like, I don't know, 15 to $30, and then we have like a couple of red candles, and pretty much we have a first Green Day bounce. This is one of my pretty much some of my first Green Day bounce. So this is kind of like one of my favorite patterns that I do like to day trade, and pretty much we're gonna look at some examples of how everything worked out. So this is PRFX. You can see so here that this is a first Green Day bounce pattern. You can see so here that PRFX bounced Friday from about 770 to a high of 1678. So I take a note of that. We're gonna get a new slide real quick, and we're gonna look at, so first off, it needs to start working. That is the first. That is the needs to start working. First Green Day bounce. So on Friday, I didn't know if it's gonna work or not, but we had PRFX that worked out really nicely. So PRFX worked out. PRFX worked out very well. I didn't really trade that much PRFX just because I don't like being the first guy to the party, but I will trade if the trade, continues. So we're gonna put PRFX first Green Day bounce. Worked, broke yesterday high, broke yesterday high of, let's see, what is the high? So the yesterday's high was at 774 and hit a high of 1670. So 777, 1670. 777 hit 1670. So that is kind of like, your buy point would be as close as you can, close to this 770. Um, That is kind of like how I have it set up. So PRFX was the first one that happened Friday. So a lot of people, look happened Friday. Look on Friday to what has worked. Happened Friday. So a lot of people look what has worked Friday and what is going to work. So what happened to PRFX? PRFX had a potential. Let's do a calculator. Let's see exactly what is going on. How I look at them. 1670. So we're going to look at 16.70 minus 7.7 equals $9 of profit from 777. So you had a potential profit of 115%. So that is 115% potential profit. That is very nice to see. And what happened to the stock? The stock sold off. So that is important to see. That is important to note. So let's see. So we're gonna examine the chart after I do all this mumbo jumbo here. Potential profit, and then what happened to the stock? Stock sold off. So that is the first one that happened. You can see. So we're gonna examine the chart. This is PRFX. Very simple. It broke yesterday's high. We had this big spike from 4 to 26, and we kind of died off. And we had our first green day bounce, and it went from 7 up to 16. So that is a huge opportunity to make a lot of money. So people are going to be looking at these type of plays to make a lot of opportunities, since this last play provided 110% potential profit. I mean, if you were trading it correctly, you would make money in PRFX. And I'm sure a lot of traders did see PRFX and they pretty much stared at it or did not take along. And soon enough, they found themselves, just not trading it. And soon enough, it worked out and we hit 17. So huge opportunity in PRFX. So now, pretty much, I woke up on Monday and I understand, like, okay, so that's the strategy that's working. You have to first look at it. This is probably one of my favorite patterns, first green day bounce. And a lot of people will be looking for similarities, like what is going to happen into Monday. Like, my expectations, is it going to be the potential profit, is it going to be lower or higher? If I find another similar pattern of first green day bounce, is it going to be am I going to have a lower potential profit or higher potential profit? That is your question here. Is it going to be lower or higher? Is it going to be higher than 110% or higher than 115% or lower? So in my situation, in my brain, is going to be lower, because lower. So it's going to be lower. It's going to be less than the strategy that has worked very well before. People are going to be looking to trade this ticket, but they're probably going to sell it a little bit sooner. So the second one that came into my radar is pretty much HCTI, which I nailed perfectly, and I pretty much nailed it, and I'll show you perfectly. I bought it. If I were gonna take my P&L on it, if I were gonna look at my P&L on it, it was around $2,500, and I nailed it right out of the gates, just because I understood that is the thing to do. To buy, let's see if we can get it. Let's see if we can get it. HCTI right there. You can see that my long in HCTI was around 470 and I sold 550. So we're going to look at HCTI. Very similar. You have this stock that pretty much sells off. Very similar to PRFX. PRFX went over here from, I don't know, like 3 to like 10. And then, it bounced from like 420 to 650. So in my mind, from 420 to 650, there was a potential profit. So, nailing it perfectly, HCTI nailed perfectly, broke yesterday's high of, I don't know, HCTI. What was yesterday's high? 420. And we ran to around 660, 420 to 660. So 420 broke yesterday's high, 420 to 660. So what is the potential profit there? In my mind, why did I think in my mind that it's going to be a lower potential profit? Because uh, you know, this is potential profit. Because people are going to be looking and make adjustments to their trading account, and they're going to be thinking like, what should I do? What has happened Friday the stock sold off. So right here, stock sold off. So they're unlikely going to hold it longer. So that means it's not going to go up so high. So if we have a similar stock the next day on Monday, it's probably going to pretty much not go as high as PRFX, I believe. So, they're going to be looking at, hey, how did the last first Green Day bounce perform? It went up 120%. Okay, what happened afterwards? Okay, it sold off. So the next one that comes around, it's probably not going to perform as well. It's not going to give you 120% potential profit, and it's probably going to sell off as well. Probably going to sell off as well. Probably going to sell off as well. So, that is kind of like, so that is the reason why I didn't chase. We had a potential profit here. If I were going to calculate here from 660, 6.6 minus 4.2 equals divided by 4.2, a 57% potential profit here. 57%. So it's less than 115% that we had on Monday. So you can see, so here, lower potential profit. So this is probably, so I always try to buy the second one because a lot of people are excited to trade, and a lot of back holders are pretty much, you can see, so here, this was my trade in ACTI. It was pretty much obvious to me that this was the exact almost almost identical to what happened on Friday. PRFX bounced, exact same pattern, a big spike, 2 red days, broke yesterday's high of 770, and I was looking on Friday here to buy it at 770, yet I never did. So the next stock that came around, HCTI, I looked at it and it was doing the exact same PRFX did, and we were basing over here, we broke this 420. And as soon as we broke this would have been your buy point right there, as close as you can get to yesterday's high, which is 420. I got in at my average price was late to the party. I was really late to the party, to tell you the truth, because I should have bought it if you were perfect, textbook perfect, you would have bought it at like 450 with like a 420 risk, or 440 with like a 420 risk. That would have been your ideal situation for this first Green Day bounce. Risking 20 cents from 440 to 660, you could have potentially made $2 a share, which is really, really awesome. But, I took the meat of the move. Like I say, I'm never perfect. But, if you were perfect, you would come in at 440 with 20-cent risk and you hold it for $2. But the reality of things is hard to be perfect. But it did give 56% in this move as the first Green Day bounce. So now, what's going to happen if we have another similar scenario? And what happened to HCTI afterwards? Well, we pushed into the morning and then we sold off very hard. And we sold off very hard because there weren't that many sellers in this. There weren't that many buyers in this because they look at PC, what is it? The PRFX, and they were like, well, the stock sold off. The stock sold off. They weren't that excited to buy. I made the meat of the move where it mattered. That's the thing I'm trying to get you guys to see. If you get in at the optimal price and you sell for a win, you have to, over 20% win is a great trade. Soon enough, there's a lot more meat on this move than there is of 20%. So, another ticker showed up to my radar. Same first Green Day bounce again. It's on a roll, but I did skip it because I saw this. I try to keep myself as safe as possible. So I did see that the potential profit was 115%, and here was a potential profit of 57%. So I estimated that the next ticker that's gonna have a first Green Day bounce is probably gonna be lower than a 52%, lower than 52% potential profit. So, I estimate, so I didn't even take that trade. It didn't really seem normal to me. Could you have made money in the next play, which I'm going to show you? Lower potential profit. So, could you have made money on this ticker? Um, I'll show you the next ticker because we had three tickers back to back, first green day bounce to take advantage of this. So, what is the likelihood going to happen to this one? PRFX worked, broke yesterday's high, 115%, stock sold off. Probably going to sell off. You have lower potential profit, and then you have the third ticker. The third ticker that actually happened in the same day, it's probably the potential profit is probably going to be lower. It's probably going to be lower potential profit. Um, because people are going to be looking at it and be like, hey, I didn't sell my shares. And when people don't make money on a ticker, they sell sooner. Or when people are when people are stuck with empty bags, they sell their winners sooner. So you have to adjust to that. If the last ticker ACTI pushed into the open and pretty much sold off, you know that the gravy train is kind of, I mean, it's not going to be 100 and some percent. So the next mover is probably going to be less than 52%. So we're going to talk about the third ticker that hit my scanner, which I did not trade because I looked at it and I was like, I saw this trend here in my mind, and I looked at PWM, which was a great opportunity to tell you the truth. But I didn't really take advantage of this because I did see a trend going that the potential profit to make money. I mean, you can see first green day bounce. It broke yesterday's high of 1464. But the problem is that we already moved from $10 up to 14. So we're already up 40% off lows. And I didn't not take advantage of this trade because it was overextended, I believe. I mean, I could have bought it. It was overextended, I believe, but there was, opportunity to make money, no doubt about it. And we have the next ticker that showed up into my radar was pretty much PWM. Same thing. I did not trade at all. Sadly, I think I should have traded PWM. Another opportunity, another first green day bounce. I did not trade this one because in my mind I saw the trend. If the first green day bounce gave 115%, the second one gave 57%. And then, I estimated that the next one is probably going to give me a lower potential profit. This is the thing about the market. As soon as a trend or a type of setup is recognized by the overall small cap community or small cap traders, stocks go, it becomes less useful. I mean, the reason why a lot of people make a lot of money in the bull market cycle is because for the past 2 to 3 weeks, it has been a bear market cycle. So you're doing the opposite of what has worked so far. So a strategy only works so far for so long. You have to recognize like what's happening in the market and what has worked in the market lately, and be able to adjust and look at potential setups that might, that will exponentially grow your account. So the next ticker was PWM, another first green day bounce, and I looked at it, and in my mind it was overextended because it bounced from $10. I'm sure you're going to be looking at them overextended, bounced from $10. So I was looking at it, I was like, if I were gonna buy the first green day to make a new high, which was 14, the price would have been 1464. There's not a lot of meat left on the meat. First green day, make a new high. There's not a lot of meat on the move, but soon enough, this stock went to, I don't know where did it go to. Say I bought it as I usually buy, even though it was overextended from $10 lows. Let me take a look. It went from I don't know, let's call it 19.5 minus 14.6. 19.5 minus 14.6 equals 4.9 divided by 4.6. So there was a potential of 33% profit. And to me, I mean, for some people, you might be looking at it and be like, this is a great opportunity, $3 a share, $3.50 a share. But to me, it didn't really make sense. 1950 was the high, 19.5 high. So potential profit was 33%. But you can see that this pattern, this strategy has suddenly, it's not working so well. So I will be more mindful whether I'm going to take this next first green day bounce or not. But you can see that, you have 33% here potential profit in this trade. This is why I do recommend, this is why most people's favorite pattern is the first green day bounce, because some of them really give really good nice risk reward, and if you buy it perfectly, I mean you might, and it works, the least you could make is around 20%. Even though probably, I don't know if it's gonna sell off or not. Probably, I don't know, because it's not up. It actually, this stock really did not sell off. It actually held most of its gains, but I'm sure it's probably gonna be red tomorrow, because there's a lot of upside resistance over here. So I mean, this is kind of like what you're looking at. I made 2,500 trading ACTI today, and pretty much was a great day overall for me. Doing my what I normally do. Bought it at 474, sold at 550, made I don't know, 16% win this morning, and I pretty much I kept myself out of danger. It's not that there isn't any opportunities. You have to come in and you have to snipe. Uh, you have to snipe at the right price at the right time, and that is what was going on in my head when I got in on ACTI long, uh, and made my $2,500 bucks over here. So that is kind of like why everything happened. If you miss the first one, get in on the second one and understand that the third one is just going to be weaker. Same thing with, trading the overall market. When you have one big mover that goes up 1,000%, I mean, the next mover is not going to be 1,000%. The next one is going to be 500% or 300%. And the next one is probably going to be 100%. And then the weakest one is probably going to be 30%, and then it's going to go up midday like PWM did and go up 350% in the middle of the day. you know Stocks change from being overly bullish to overly bearish very quickly. The I mean, we always come in and we always look at, what's the best case scenario, but understand that that best case scenario comes from the worst case scenario, where you can go through a couple of weeks or a couple of days where you feel like nothing is working, and some people just pretty much dig themselves a hole and trade what they should not be trading and think, everything is rigged and blah blah blah. But you have to wait the wave of a strategy, working. And then this strategy, the strategy was to pretty much go long all these tickers, because they worked out, and it's a really good strategy to put inside your portfolio. Let's review. You had, three tickers in just 2 days to be able to maximize, your trading account. PRFX was the first one, and that was on Friday. First green day bounce. Bounce from, you can see, so here around, if you had it perfectly at around 770 up to 17. Amazing. ACTI is the one that I actually went long, and I actually went long in my live stream this morning at around 470, and I was pretty much late to the party, because 440 would have been ideal with a 420 stop. And we bounced from 440 to 660. That's $2 a share, and then soon enough we had PWM that we bounced just off the lows there from 10 to like 16. This is a really good pattern. You might want to put on your portfolio and understand like what's going on, and how to maneuver these small cap securities. And the first one is always the best one when you find a new strategy. That's why people are pretty much going to go to the second one that is similar to this, and understand that as you continue to trade the same setup, it's going to be less and less profit. There's going to be less and less profit. This, as soon as the strategy, as soon as it happens 3, 4, 5 times in a row, it's just not gonna, people are gonna catch up to it, and it's just not going to work anymore. So always watch what's working. Something astronomical like a first green day bounce, like a stock that gaps up 300% and sells off, or a stock that goes up 1,000%, or something like that. Always watch for abnormalities, because this is a really good indication of what the next trend of stocks is going to be in the sector. The stock market is kind of like a factory. If you get one big happy meal, you're gonna get 5 or 6 or 7 happy meals, well, actually 3 to 5 happy meals in a row. If you're gonna get a KFC bucket, you're gonna get the biggest one is gonna be a really big KFC bucket, and then as you get the third and the fourth, it's just gonna be less chicken in your bucket. That's kind of like the best analogy that I have for you guys. But or whatever analogy you want to look at. So hope this video has helped you guys. Make sure you give this video a like, and subscribe for more. Other than that, I'm sure there's a lot of people that really understand like how to maneuver this market, and gonna look at some gonna look if there's some comments over here, and pretty much call it a day, and see you all tomorrow in my private Discord and my private chat room. Take care and have a good one. Peace out.